Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for July 18th, 2023. Remember, trading futures involves risk and isn't suitable for all investors, but everything I talk about here today is my own opinion, not a direct trade recommendation. So I really wanted to touch base on corn, having a bit of a breakout day here today. We'll begin with the December corn. Looking at a daily chart here. December corn coming out of oversold territory on that daily chart, having sold off from above 620, coming all the way back down to test $5 yet again. And what was really one of the more volatile corn markets that I've ever, had the pleasure of experiencing. If you go back to 2012 and to other crazy years, there have been volatility. Usually this time of year, though, they had entrenched into much more of an uptrend. But I think that this is a show of, the show of the fact that, one, we have some questions maybe about demand down the road, right? Does corn need to be above 620? When it was, did we price ration out some demand? And if we did price ration out that demand and take some of the weather premium out, well, $5 corn obviously on this chart is starting to look pretty darn cheap. December corn trading an outside day reversal higher here. Quite bullish now that we're back above the 18-day and the 55-day moving averages into today's close. You can see the old trend line that we've just which has actually become more of a median or a mean, for the range of this market. We're back to that level. So we're not quite back to 50%, but, you're kind of back to the average price that the market had found as resistance, with the exception of one period of really big weather market premium dryness in the middle of June. That has otherwise been unwound in this market. And the market is now trying to find its way in price and discover back towards what it feels is fair. So taking out all that premium, now corn has reversed what was big sell-off down into support. We had, support obviously was found somewhere down in this 480 area, testing below $5, this big figure for corn. We are testing the psychological idea of being a crop, sub $5 again. And it spent 2 weeks of trading effectively. This is about 10 trading days, going sideways, carving out, the 485, really a 490 to 510 range. We capitulated during the WASD report here for July, made a new low. Right, it made a new season low, new low for the year 2023. Wasn't a contract low because we'd been, much lower, but it was certainly a contract low for when December 23 corn is highly liquid and traded. I mean, you had to go back to 2021 to find, prices where we were lower. So, for all intents and purposes, this is the near-term contract low for December corn here into the 480 area. Okay, anyway, we've now spent a couple days reversing that trend and had an outside day reversal higher. And again, 55-day moving average at 534, the 18-day at 524. We're now back above. The 100-day here at 544 is the kind of resistance we're going into. The 200-day all the way up there, 575. Seems a long way off, but when you take a step back on the chart of corn, now we know resistance is really up around 620 for the range that we've been in. Breaking down the 4-hour chart, we've actually had a pretty technical sell-off and reversal at this point. Coming off of the highs for corn and coming down off of the highs, let's remove the fib that's on the chart. There's basically a 50% short that began a series of, one extension that became a new extension. Into the final extension that formed a range. The market capitulated, almost got down to targets, but effectively came up and finally broke the series of fibs and very aggressive selling pressure as the market headed, sold off of the tie. All of that we can see, in a lot of detail in 2020 hindsight, but we're looking for footprints in the sand for how we came and how you can define trend lower. We can then define a trend reversal in this upswing, okay? That immediately correlated right with this range break, capitulation to a new low, and the market trading 2 days up to finally break and close there that last Friday at 514 for December corn, back above the old highs of the range. Gapped up this week. Yesterday was back and fill price action into the 50% retracement from the 481 low to the new highs where we gapped up. The 503 area held as support. Kind of got an upward sloping trend line now that we can draw on the chart. But this area in the market held a 50% pullback, 2 steps forward, 1 step back, up to a 537 upside target. Target's been achieved. Secondary target's up around 554. Full 50% off the highs. It's worth mentioning from that June high down to the July low now. Resistance at 555 is halfway back of the decline. You can't ignore, that type of level. Not that I necessarily would be a seller there, but maybe, for some cash sales or to start peeling off something for, to start the year if we haven't done something right on the way back up. Anyway, it's not a level that I would speculate being short, given that we're seeing the signs of a trend reversal in the marketplace from, this capitulating low. We see an outside day reversal higher today, which is just in and of itself a bullish signal. You have a 50% retracement from 503, which has held itself to a target. Next in the series is going to be drawn from the 503 lows to the target highs around 540 there. We're going to remove this other one from the chart. You can always drop, full fib from the lows to the highs, right? Anytime, any 50% swing in markets is always going to be talked about with a technical, from a technical perspective. Anyway, okay, 521, if it pulls back, it correlates with these highs. But the truth is I don't know if we're going to get that pullback. I kind of got a hunch that if we were to go down into the short-term time frame, of just today's price action, we can actually find levels that might hold here and continue higher. Well, if we break down the really small time frame, we know the 521 level. We're going to move that. This is just today's price action, right? Well, we had some swing off the lows. Well, I believe we started to hold these extension swings where we go from highs to highs and they pull a 50 back. It's mathematically very similar to, if you draw this full pull from a low to a high here, and this is where we're going back to here. Imagine this is all you see on the corn chart right this morning after the open. This is the start of the day. We gapped lower, we reversed higher. This is a very dirty fib pull. But the truth is that from this high, we were able to kind of reverse engineer some 50% pulls that were maybe starting to hold from a high to a high instead of from a low to a high, okay? The 50% pull from a high to a high is very similar to a low to a high, maybe 25 or 30% pullback. So there's other fibs and other ways of describing them, but this one makes sense to me because of how it develops in price action. And that's something we get into more detail in that Strategy of the Week webinar every Thursday at 1 p.m. Central. Anyway, so it looks to me that we had a significant, high to high pull. It went to a target, okay, the negative 23.6% target. Then from that entry low to the new target high, or, once that pull was complete, there's, I think, a similar 50% that went to its target, but didn't really pull back at all. It just blew through its targets. Whenever we see one of those blowouts that goes way beyond the negative 618 line from a small pull like this on a chart that we can, rationalize, markets making 2 steps forward, 1 step back, 2 steps forward, 1 step back, we can also, think about the high to new high extension. And, we might have pulled back and, closed the day right into one of those levels. And if that's the case, we'll see pretty much the market hold above 530 into the overnight, and then we'll trade up to 545 and then go to, 550, 555 and beyond. And that's tomorrow's will be tomorrow's extension day. But we can't rule out, the full 50% pullback for the whole day that we talked about before down around 521 either. So we go below 530, might get down to 520. That's your next support. And then, of course, the last and final line in the sand, would be the full 50% swing from lows to highs that correlates with that upward sloping trend line too, down around 510. I'm not saying we're going there tomorrow or anything, but you got to be aware of where some of the supportive levels are, for corn, I think, at this time. So, all right, well, thanks for joining me here today for this strategy of the day update. You can always get in touch with me over here at Zaner at 312-277-0110. Find me on Twitter and Facebook, or shoot me an email at dhussey@zaner.com. You can also join me every Thursday at 1:30 p.m. Central for the Strategy of the Week webinar, where when I'm not traveling and visiting people, we will, or having to reschedule it, I host every week for about an hour where we go over price action like this over the whole spectrum of the futures market, and discuss in a little more detail some of the current market conditions. Have a great day, everybody. We will be back with you as price action develops. Take care, everyone.